Alright, but today is the 25th of May, being a Monday, and this video is simply just going to be doing an update and overview on Ethereum, as well as just a couple of speculations I have for this week on Ethereum, as well as the rest of this quarter and going into the next quarter as well. But observing Ethereum right now, we can take a notice of the fact that we've had this sell-side delivery motion in which I was looking to see occur for, to be quite honest, I don't know how long. But yeah, this was essentially what we were looking to see. We were looking to see sell side delivery towards all of this TLP in a low resistance manner, which has unraveled itself out over the course of last week's trading. Now, I vaguely remember in the last update, I was stating the fact that my perception in relation to time may be a little bit skewed in terms of this was price distortion. The idea that I was looking to see occur was never invalidated. It was simply just taking a lot longer than I would have anticipated. And I attribute it to the fact that we're paying attention to the daily time frame. These setups are going to take a lot longer compared to what I'm used to in terms of, intraday trading, and I'm sitting on, 1 minute or sub 1 minute. But I said that those signatures that I'm observing on the 1 minute are going to be present on the daily as well, which is what we were paying attention to. So I did say that I'm still deeming all of this segment of price action inception for that sell side delivery motion. When I said this idea would become invalid is if we were to engage with that previous month high as well as that February high of month, and we see that we have not done that. So we've had this deliverance down towards sell side. We had the inversion of this imbalance. And I did mention that if this imbalance was to be inverse, we'd look for it to be utilized as resistance, in which we end up seeing body candle closure, very respective, inviting for that sell side delivery motion. Now we've delivered down towards sell side, engaging with this -2, -2.5 standard deviation, previous month low in alignment with it. And we currently have a cracking correlation with BTC. So Ethereum has engaged with the previous month low. BTC has failed to follow suit. So if we briefly take a look at BTC, the previous month low would be located, oh, it's right there. Previous month low would literally be right here. BTC being the lagging asset. But I don't mind this because I have something panned out on a macro lens perspective for BTC and Ethereum. I like the fact that BTC is lagging behind Ethereum. It aligns with what I'm looking to see on a long-term basis. But I'm not looking for the fact that Ethereum has now engaged with the previous month low, cracking correlation. We're at that -2, -2.5. I'm not looking for a smart money reversal here. I'm simply going to be looking for a reaccumulation and then a redistribution of orders to continue that sell side delivery motion. So if we quickly remove all the annotations, jump onto the weekly chart real quick, we can see that that deliverance that we had down towards sell side in a low resistance manner, we ended up forming an imbalance. I'm looking to see this imbalance being utilized as resistance so that we can continue that sell side delivery motion, because if we're paying attention to the weekly chart alone, we haven't actually engaged with any pool of sell side other than this short-term low that resided inside of this range. So we haven't engaged with this low, we haven't engaged with this low, and we haven't engaged with this low. And we've just had this displacement below the short-term low, and I'm looking to see us engage with this imbalance. If we don't engage with it, that's even better in relation to a sign of order flow. We're very heavy and one-sided. We're eager to go down towards sell side. But if we are to engage with it, simply look to see that utilized as resistance to continue that sell side delivery motion to engage with all of this sell side. So in relation to the speculations that I have, I've got one for Q2 till Q3, and then quite literally the week that is commencing right now. We're going to take a look at this one first, and it's basically what I've just stated. Previous month low engaged with, this was taken on the 23rd of May. So this was just only 2 days ago. It was when we engaged with that previous month low. So we engaged with that previous month low, -2, -2.5, simply looking for reaccumulation and a redistribution of orders. So it would look like us engaging with the weekly CB low, forming a point of inception. So this would be your inception continuation model. We've engaged with that -2, -2.5. We're looking for that second stage redistribution. And then we continue to engage with that -4, -4.5, which aligns very nicely with that February low of month. So in relation to where that currently stands, this candle right here would be the 23rd of May when that screenshot was taken. Price action slipping into, moving rather lethargically. It's not doing anything of significance, but we're currently drawing towards that pool of buy side, which would be your weekly CB low, would look for us to engage with it, deliver down towards sell side. Now, we have a range that's been established here from this candle's high all the way down to this candle's low. You have your equilibrium and OTE right here. We can deliver above an equilibrium. That's more than fine. If we don't, that's once again just a sign of order flow being very one-sided, very heavy. You'd look to see potentially BTC delivering above an equilibrium, because as of right now, BTC is the stronger asset. BTC is the asset that's been continuously engaging with buy side. So with that exact same respective range, so from that candle's high all the way down to this low, we see that the equilibrium is right here. BTC can easily engage with the equilibrium, and this is going to be a form of a Kraken correlation. This would be your equilibrium Kraken correlation fill. One of the correlated assets delivering into a premium of the range, and then the other correlated assets failing to deliver into a premium of that range. Now, if everything I've just stated does not unravel itself out and we actually do begin delivering up towards the buy side, I'm no longer interested in Ethereum. I would not like the fact that we've left all of these lows intact across all of the assets. Yes, we do have that April low of the month Kraken correlation, but it's internal range liquidity. I'm not really too intrigued in that, to be quite honest. So if we were to potentially have a smart money reversal, I'm not interested anymore. My interest will only remain if we have a reaccumulation of orders to continue that redistribution down towards sell side. Now, when am I looking for this to occur? Well, with the acknowledgement that my perception of time was a little bit skewed when we were sitting in a phase of distortion, using sound logic, I could say that this would be very likely over the course of next week's trading, because in relation to that economic calendar, we have a lot of high impact news during next week, as well as the fact that the month of June will open up next week. So we'd be looking to frame that month of June power of 3. In an ideal world, we actually do engage with this weekly the weekly SIBI low before June, so during the course of this week, but we stay stagnant around it for a little bit. We don't invite that sell side delivery motion instantaneously. But then once June opens, that's when we invite that delivery motion for sell side in a very low resistance manner to then engage with that February low of the month. And this would simply just align with that macro lens perspective. So simply just going to take a look at that speculation. So just jumping in and taking a look at the chart, we have this standard deviation anchored, projected out in price, -2, -2.5, and this is where we have that reaccumulation of orders. But where we're looking to start would be the yearly opening. So we have that year opening, and which is very important. Year opens, we deliver, form a high, and then we have that sell side deliverance in a very expansive manner. And then we engage with that -2, -2.5 standard deviation, which was established from a point of inception over last year. So this would be during October. And then we begin retracing back into this range. We already know that this is where we're deeming a point of inception to occur. This is essentially where we've gotten the idea for us to have that sell side delivery motion. But if we are to respect our price delivery phases, this delivery phase sequence is consolidation, expansion, retracement, expansion. We are now currently anticipating for that second expansion to occur. And once that second expansion finishes, we're then going to slip into a new phase of delivery, which is what I'm currently looking at right now in terms of if we are to continue this sell side delivery motion that I have been anticipating, and we engage with the February low of the month, and a Kraken correlation establishes itself here, we already know that BTC is lagging behind Ethereum. So it's more than likely that if we do engage with this February low of the month, BTC will not engage with it. And we're going to end up having a second stage Kraken correlation. BTC has already engaged with the previous year low. Ethereum has failed to follow suit. So if we engage with that February low of the month, I'd then be looking for a point of inception to establish itself here for buy side delivery motion so that we can deliver back towards these highs as well as the yearly opening. So this would be that macro lens projection that I'm speculating on, which is why I was saying that I don't mind BTC lagging behind Ethereum. I'm not fazed about the fact that April low of the month has been engaged on Ethereum and BTC has failed to follow suit. So what I said for this would be deliverance under February low of the month and the Q1 low, engagement with the CE of the monthly wick. So forgot to mention that as well. We have the consequent encroachment of a monthly wick that resides right here. From there, we'd look for a point of inception to be established, and then that would potentially serve as the low of the year for Ethereum. and then deliverance back up towards buy side, and that yearly opening serving as a drawn liquidity. So it's the current idea that I'm looking to come into fruition on Ethereum, and in an ideal world, the previous year low stays intact on Ethereum. So we do not engage with that previous year low in an ideal world. We simply utilize the consequent encroachment of that monthly wick for that point of inception to continue towards buy side. And then a standard deviation will project the February high of month being that -2, -2.5, and then the yearly opening being that -4, -4.5. So if we are to form a point of inception here, standard deviations are always going to come with a point of inception that you can look to project that market maker model. I'm already projecting it without the standard deviation being there, in terms of our -2, -2.5 is going to be here, our -4, -4.5 is going to be here. This kind of just brings it back to one of the analysis videos I was mentioning, in terms of we don't need standard deviations when it comes to the way we're engaging with price action. Standard deviations are nothing but stabilizers, in terms of they add conviction to an idea that you already have. So if this idea is to potentially come into fruition and everything I've just mentioned ends up unraveling itself out, we have that deliverance under that February low of month, engagement with that consequent encroachment of the monthly wick, point of inception, change in staying delivery, standard deviation presenting itself. If that -2, -2.5 projects for these highs, -4, -4.5 projects for this, it simply just adds conviction to the idea I have in mind. I've already deemed these drawn liquidities before the standard deviation deems it draws on liquidities for me. But that is quite literally it in relation to the Ethereum speculations. Of course, I could be wrong. We have this weekly standard deviation, -2, -2.5. We know that this means one of two things: smart money reversal or reaccumulation redistribution. If this is a reaccumulation redistribution and we continue that sell side delivery motion, engaging with that previous year low, and BTC stops lagging and it begins to catch up with Ethereum, engaging with the time-based liquidities that Ethereum has been engaging with, we have a long way to go in relation to this standard deviation. That -3.5 is projecting for 500. That -4 is projecting for 200, and then we're at 0. One of the overviews I said that's a bridge to cross when we get there, and it quite literally is. That's not really something I'm going to fixate on right now. I'm simply just going to look at what is close to us at this current point in time and what can possibly end up unraveling out. But yeah, I basically just said if Ethereum bleeds through that previous year low and BTC begins to follow suit, bleeding through sell side, Ethereum may visit under the $1,000 mark and that $500 mark, to be specific. I basically said the exact same thing, but yeah, that $500 mark, because it's in alignment with that -3.5, and -3.5 can serve as a point of terminus. -4, -4.5 is extreme terminus, in terms of we need to roll over now. A new phase of delivery needs to begin. Especially when we're paying attention to higher time frames, it means that we're quite literally at a point of extreme, because if we're anchoring, I'm going on a tangent here, but if we've anchored a M1 standard deviation, -4, -4.5 may be exhausted, and that's because a higher time frame market maker model is unraveling itself out. That M1 standard deviation holds no weight to whatever the hour 1 or the hour 4 is looking to play out, because as we know, the higher time frames always rule and parent the lower time frames. There is a hierarchy in relation to the time frames. But yeah, that is basically it in relation to Ethereum.